Alrighty, traders, good afternoon, good morning, good evening, and welcome to the AAA session here once again on this beautiful Monday afternoon. Hopefully everyone had a fantastic weekend and looking forward to trading this week. We've got a panel of traders who are going to be talking about trading opportunities as well as myself that we're going to be looking at as we move into this week. Also, don't forget, we've got the US elections coming up in a couple of weeks. That's going to be real interesting. We're going to have conversation around that. I know that Tyson wants to talk about SPAC, I believe it is, a stock that you want to go ahead and pay attention to. Also, we're going to go ahead and talk about the currency pairs that we focused on last week. So if you watched last week, we're going to go ahead and have a conversation around that. If you haven't, make sure you go check out the video from last week here on YouTube. Now, for those that have not subscribed to the channel, I want to go ahead and encourage you to subscribe to the channel. Any videos that we do post go live, you will be notified on that. Also, if you can like the video, that'll be great. Comment on the video as well. We do address those comments as well as they come through. So with that being said, let's go ahead and get the legal stuff out of the way, and I'll go ahead and introduce you to the panel. Alrighty, traders. Well, welcome back. And yes, we do have the panel, and we've got Chris and Tyson back again for more technical chatter, as well as talk about stocks, how the stocks are moving, what stocks to pay attention to. But more importantly, I think as the focus, the big white elephant in the room is, of course, the US election. How is that all going to be affecting your trading? We'll take a look at that as well. We have discussions today. Chris, how are you doing this morning or this afternoon?
Yeah, I'm doing great, Gary. Nice to be with everybody. Super busy week. We have decent earnings week. We have final stage of presidential debate. The election heats up. We're just over 2 weeks out. It's the 31-year anniversary of Black Friday. So I was looking to see what the markets did today or what they're going to do. But I think we have a lot of things that are going to hinge on the U.S. election, how it all plays out, and I'm just kind of taking everything day at a time right now, continuing to grab cash when I can get it, protect my profits, keep that margin of cash on the ready, and looking forward to this, sessions like this and this event, our election event we're running November 2nd, 3rd, and 4th. That's really going to set the tone for the rest of my year.
Absolutely, Tyson. How's things? How was the weekend? How are things looking regarding the markets that you're looking at?
Things are good. Yeah, last week was an awesome week for myself and a lot of my students, money flow students, turning point students. It would be a lot better if I didn't look out my window and see it snowing right now. I'd enjoy that a little bit more. But you know what? Listen, I live in Minnesota. Can't complain about the snow. Well, I guess I can, but it's not going to stop it. But things are good.
But nobody listens to you, right? I was going to say, you can complain, but no one's going to listen to you, right?
Yeah, just keep that Minnesota, dude. We don't want that across the lake.
Exactly.
Yeah, and you keep it up north. Whatever weather you're experiencing, we're experiencing excellent weather down here. So you're in Florida, which is great. Hey, all right, so let's dive straight into it, right? Let's talk about the currency pairs that we paid attention to last week. How did that play out? What did you guys do with regards to your positions that you're holding or closing out? Let's start off with Chris. Chris, you were looking at the Euro Swiss franc. What is your stand on that, and where are you at with that currency pair? I'm gonna move to the currency pair right here.
Sure. So I pretty much I'm standing ground on the Euro Swiss. It did make a sneaky little run towards 106.85, 106.80, but we basically closed the week at the support level at 107.15. So I actually have my weekly outlook video is processing. It will be posted on my YouTube channel here shortly. I'm going to look to see just the next couple of days, was that like a sneaky little stop loss run on the Euro Swiss, just coming down to those lows, and then we're going to start building that position back up. I'm still long on the position. So my 107.50 levels that are filled, I'm going to hold and see where the markets close over the next couple of days or where the weekly candle closes this week to make sure that the Euro Swiss is still inside that range, or hopefully we're going to make a run towards 10800 or higher. That 107.50 to 108.10, 108.15, I'm still going to scalp that. And then my deployment is going to be bullish above 108.40. So we've talked about that in my trading room. We talked about it in this session. If we're above 108.40 on a daily candle, I'm going to start trading really aggressively bullish. But I want to make sure that, last week, if we're just testing those support levels, that we don't invalidate it this week. So I'm going to give it a couple of days, make sure I'm not, bailing out of my positions, and just kind of give it some time that it needs in case we're, still directionally going to be in the right direction to the upside.
So you were, just to be sure on what you were saying, you were long on these positions going up to the top. You're looking for around about 110, I believe, or something like that. But you were buying long, you're bullish. And so when the market dropped back down here, did you close out any positions, or
I didn't close out. I want to give it time to make sure, like, am I really wrong in this trade? And so I waited on Friday's end of day close, and Friday's close was not really that bad. We closed right back up to support. You see that today's price is indecisive. So if we have a really aggressive bearish candle to the downside, I might take some small losses on those those near-term positions. But if we close higher, let's say the price today makes it up to 107.25, 107.30. Well, it's holding that support level. I think we're putting a near-term bottom in. So I'm going to continue to hold right now.
Okay, gotcha. All right, so that's
quick question on this though. Quick question on this. So I love the position. In fact, the Euro Swiss is a really interesting currency because there's an argument that could be said. We want to trade with stops. Man, it is at an area where I am convinced we are going up longer term. And so having, wider stops makes a lot of sense to me. But even doing something like this, and kind of like to get your thoughts on this, what if you tighten your stop up to below Thursday's low? Because if we break below Thursday's low, I think there's a decent probability that you could save yourself 60, 70 pips with a push down to 106.25, 106.30, and then start to deploy long again there. So save yourself that 60, 70 pips down.
Yeah, like I said, I mean, so my positions are built around 106 and 105. Okay. That's where a majority of my positions long are holding right now. So for this to break down a little bit lower doesn't really change my overall position. It would change how I look at those near-term trades. Like the last couple of weeks, we talked about buying it at 107.50. So it would change maybe those short terms, but it's like I've got a bullish position. This thing truly to me is not really invalidated unless we close below 106 or 105. So that's why I said, like, I'll let it just go the day, close. Is it still valid? Go the day, close. Give it the week. Is the week still valid? Is it still in this, the box that Gary had in this chart? Is it still in that sideways range? If so, I'm going to continue to hold. But you're right. If it breaks below Thursday's low, it's probably going to slide down to, 10600, 10610, and then we'll see what happens from there. But
this is the question you got to ask yourself, traders, on a type of trade like that, where it is everything Chris said is true. It could, right? And I think the probability of it going down to that 106.25 level is pretty high. But what if it doesn't? It slips below Thursday's low, bases a little bit, and then you get your rocket ship higher. Do you want to miss the trade? And in my mind, I don't want to miss the trade. So as long as I'm not over leveraged, overexposed in this, I would say, you know what, I might buy a little bit lower. I'm not going to add to the position, but I would probably give this a little bit more room, kind of like what you're doing, Chris.
Yep, I agree.
Yep.
Yeah. And you know what? Let me say this. I think it's a great place right now to start buying in. Now I get it. If it does break lower, it can break lower. And the reason why I like this play as a buy right here, Chris, is because even if we do break out low, this is a starting point right here. We're chasing after the top of the box right here, and maybe a breakout further north. If I look at my setup right here, I do have price chasing after what I see as an ABC correction move all the way up here at 110. So that's what I'm looking at long term. But the reason why I like the buy here is because we are at support. And so what's going to happen here is we're going to have price testing this level right here, which is I still see this as a test. So I'm keen to buy on this. And then if price does work its way back down, I would want to go ahead and wait until it comes back down to retest this level, then look to buy back in again, but heavily buy in here, because what's going to happen is this is going to be an ABD target right here, and we're going to get not only support come from the trend line, but we're also going to get support coming off this this target right here. We are seeing the oscillator in the oversold condition. I think we're good to go long. So I like that whole play buy right now and looking to add on to that position. But I know you've got quite a few added already to this position, so I think it looks good.
Yeah, I agree. I think that, again, more importantly for me is that my medium term outlook is on point. Like I want to be long until 110, 110.50. So for me to all of a sudden micromanage and say, oh, it slipped, 20 pips below my support level and I should get out. It's like, it doesn't make me want to get out of the trade. You know, I mean, it really has to invalidate major levels at 106, major levels at 105 before I'm going to really take a second look at this trade. I mean, I think long term, you know, getting back to 110, 110.50 is very doable. There's a yearly pivot. That's a nice corrective move after 5 waves to the downside. So it's just, you know, this is a lot like many other currency pairs we've looked at, where it just takes a lot of time for this move to happen. I mean, we look at the dollar yen moving side by side that haven't really created much excitement the last couple of months. We're looking at this one for 3 months now. It's been sideways. The euro Swiss, it's hard to get them to separate. You know, if you look at currency strength charts every day, the euro and the Swiss are right there, either equally strong, equally weak, and this currency pair doesn't do a whole lot. So it's a patience game for me.
So what I hear, and this is so important, and I agree 100%, is I hear conviction in your initial thesis and analysis and directional bias and under leveraged positions. So you can sustain the movement, you're not going to get shaken out, and you have a lot of conviction in the direction that you ultimately believe we're moving in, which is a phenomenal way to manage. By the way, that's the way institutional traders manage their trades.
Yeah.
Well, that's me.
Tyson.
Yes.
Tyson. Tell me what are you doing on your pairs that you're watching? I believe it was the Aussie Jpy, was it?
Yep. Phenomenal trade. If you remember, I set it up in 2 different ways. I said you could be very conservative on it, and you could wait for the break below 74.90. I said the problem with that is you got to have patience, and you know you're giving up. You're waiting 100 pips for the break before. I said that's the really conservative way to do it. And then I said the stop would be 76.60, and I'm ultimately looking for a target of 72. But then I said I even like getting in. If you remember, I said if price closes below its halfway point on Monday, so that Monday that first bearish bar down, I said if you cut that bar in half and it closes below the halfway point on Monday, I like the sell side. So students or traders could have stepped in on Tuesday's open, started to sell technically at right around 75.85, 75.90. Trades up about 115 pips now. So good profits in place. Trades working out in our favor. We had really, really nice risk versus reward. Problem is this with it. I love the trade still. The question I always ask myself is, can I move my stop? Can I lock in some profits and move my stop down and kind of trail my stop? And the answer is because of the way we moved, there's no place for me to move my stop down to. So I don't want to move. I want to keep my stop at 76.60. I still have a target of 72. Saying all that, I do think this is, and you're going to have to make a choice, traders. I think there's a way that we could micromanage this a little bit, wait for a rally back up to that next high price up towards 75.20, and then look for that next sell-off so you can save yourself about 60 pips. However, here's the way that I would do it. If you have, let's say you have 100 pips of profit in this trade already, and you're trading a standard lot. Don't close the entire position. Close half of the trade. Put a sell order to sell again. Let's hypothetically say at that 75.25 level. Get into a full-size position again there, or if we start to break down, enter into the full-size position if we break below Friday's low. So basically, let the market prove itself to you. Lock in some of your profits now to minimize, basically eliminate your risk by closing half of your trade. If price rallies back up to 75.25, get into that other half again. So now you're in a full-size position. Or if price doesn't, we don't go back up, you want to get back short, but wait for it to prove itself on the break below. I think that's a really nice way to play it, to eliminate some of your risk, lock in some of your profits, and still be going for that 72 target. So good looking trade right now. A little bit interesting on how we're going to manage it, but I think that's the best way to manage it right now is lock in half of your profits. Sell at a higher price. If we don't get the higher price, get back into the full-size position if we start to break down.
Okay. Yeah. Interesting. Yeah. 72, if I look over the charts, I've been just going through the charts right here. 72, I think it's, I can't see the exact value there, but it looks like 72. Let me move this away. Or just do this. Let's do this. We're looking at 72.98, so 73 right here as I'm looking as a target, but I'm guessing that the market's chasing after those lows, so 72.67, definitely a key level right there that the market's going to score a point, taking out the lows and pull back. We've seen this.
Yeah, this isn't going to be one of those trades, and I'm glad we're doing this on a weekly basis because, let's say next week we're down to 72.50 or 72.60. I'm not going to just sit here and be like, hey guys, we're holding to 72.
Yeah, I was going to say, I'm
going to be like, guys, let's lock it in. Let's sell higher, and we're going to ride this. Ultimately, I think we're going down to 72, but there could be 3, 4, 5 opportunities all the way down there.
Yeah.
In fact, there's really actually a pretty strong argument that if somebody came to me and said, Tyson, I want to close, I'm up 100 pips. I'm going to close my entire trade and try to short again 65 pips higher than we're at right now. I actually could say it's a pretty good plan. Now, the risk of that is we don't get that 65 pip bounce higher. You miss that next flush down.
Yeah.
But if you miss that, there's other opportunities that you can get in. So with that being said, I'm riding the waves right now. I like the short side. I'm not, I always get the question on a trade like this where, let's say I said, hey, lock in your profits, sell higher. I always have somebody ask me, hey, can I buy? You can go ahead and do whatever you want to do. The answer for me is no, I'm not buying. I'm going to look for that higher price to sell.
And that's a good trading decision, because keep in mind that although, and I think a good example of this would be the EAs and the strategies that we put together. We have what we call max targets we're looking for, right? Like Tyson, you just mentioned 7,200. That is your max target. But it doesn't mean if you place trades with inside that you can't keep taking profit on that, because that's what we do with the, for instance, Right Trader Max. Right Trader Max has a 1-to-3 risk-reward ratio built in. But we have a target that we can set that we want to actually go ahead and close out all trading at that point. So which means that if the market reaches their 1-to-3 risk-reward ratio based on the setup, it's going to take profit, but it's going to keep trading until it gets to that target. And when it gets to that target, it's going to eliminate the EA, stop trading altogether, and then we're going to revisit the setup. And so that can be applied to manually.
I call that,
too,
Gary,
right?
harvesting an income. So it's like, hey, here's my long-term target. How do I grew up in rural Iowa, so around farms and stuff like that. So how do we have this long-term plan, but how do we harvest as we get down to that level? How do we generate some income, sustain ourselves, and ultimately, so in this trade, I'm looking for 270 pips of straight line movement. But actually, if I manage this in the correct way, I might be able to turn, instead of making 270 pips, I might be able to make 1,000 pips if I can manage it on the way down.
Absolutely. All right. Well, then that brings me to my pair. There was two pairs. I was looking at the Aussie US dollar and I was looking at Euro JPY last week, and we had conversation. I dropped videos in on YouTube channel on all the good stuff on even on the in the trading room, Facebook, you name it. Posted the stuff. So you guys definitely got the information around this. So let's go to the currency pairs. Let's go to start off with the Aussie. And yeah, we have it. So Aussie US dollar right here, we saw a nice little turnaround. What I liked about the Aussie US dollar right here is that it came right back to the backside of the trend line right here. So all of this movement, and normally when it trades above this low, you would want to stay out of the market. But in this case now we saw a downward trend line that was acting as a good level of resistance. We said go ahead and start selling right here. If we trade below this level, it's just going to go ahead and stimulate the bears, and so it did. And then we broke through that trend line, and it just fell from that point onwards. So we had a good little move to the downside. Now remember, this is a daily time frame. And just like Tyson says, let's go ahead and create some harvest, right? Keep pumping in some profits as we go ahead and move down towards our target. So this is the movement to the downside right here. But what's important right here is we go to the 1 hour time frame, and we look at the 1 hour time frame, and now this is the opportunity that's presenting itself right here. So we spoke about this big move down here. This is the AEB move. And you can see we've gone ahead past the 1.618, so we've targeted a level of profit. We got profited. Now we're in this retracement. And so now we're looking at a retracement move and a further move to the downside. So I'm looking for the Aussie US dollar to continue to fall back down south right here. Now I'm going to do the same thing on the Euro JPY. The Euro JPY, we did the exact same thing. As you take a look over here, let me go to the larger time frame first. And take a look at the larger time frame. Here we have the market turning right here. We spoke about it. We said this was a sell zone right here. Price came back to retest the lows. Turned out with a beautiful bearish candlestick formation. We spoke about this rising wedge. We had a breakdown south. Traders went ahead and took profit going south. But then we decided to get out of the market. And I'll go ahead and show you what the lower time frame looks like right here. Lower time frame says we had a wave 1, 2, 3, 4, and then 5 down here. This is where traders are looking to get the heck out of Dodge. Right here, we can go ahead and call the number 123.15. I'll be honest with you, I took profit a little bit earlier than that because I wasn't going to pay attention to the markets any longer at a certain point. And so the market did move to our target. So gracefully, traders went ahead and took their profit. And we said, that's it. Now we're going to start looking to get back in on this, but only on the retracement move. Here's the retracement move. We spoke about 120 to be the factor. Market's right here at 120. We're going to make a decision to get in. Now, before I go ahead and say to traders, listen here, let's get back in on this currency pair. We're going to be talking about this right after Tyson tells us about the what stock to take a look at this week. But there's something that we're going to go ahead and talk about that's going to influence my decision on Aussie US dollar and Euro JPY. And it is the US election. But we'll talk about that in a moment and discuss a little bit more on that. But that trade worked out pretty solid. And I'm going to have more conversation when we talk about the US election. I'm going to have more conversations about currency pairs that I'm paying attention to this week. So stick around. Tyson, I'm going to give you the mic now on what do you want to talk about regarding stock. I know you got a good thing that you want to share with everyone.
Yeah, I do. I think this is really, really important. In fact, is Gary's screen black? Gary, your screen looks black.
Oh, don't worry about me, buddy.
Oh, okay.
Yeah.
No problem. So SPAC, S-P-A-Q. It's a special purpose, special acquisition purpose company, and it's essentially an IPO. It's a kind of a quasi way. I talked about this quite a bit. In the last few weeks, I talked about this. In fact, last time I talked about this was on September 21st. Shared a chart with a bullish trade that I was looking to take, and the trade. If you would have bought the stock, and I just want to do a comparison between stocks and options, and I want to explain why this happened. And this is really, really important. So this is a bullish trade. And I said, hey, guys, I'm bullish on this, and I expect it to go up, and this thing could be awesome. And the stock was sitting at $16.50 on September 22nd. It's now at $13, down 20%. Tyson, holy smokes, you suck. However... well, first of all, it's I'm not worried. Literally, this is a play that is I'm trading this or holding this. This is an investment that I'm holding at least through the merger. The merger date is the end of October. So personally, I'm not worried at all. But let's do a comparison. So if you traded the stock, you're down 21, 22%. That's not good. If you did it the way that I did it with options, which is being the insurance guy, right? Saying I'm going to sell premium because the event premium, the risk in the stock to go down was high. The risk in the stock to go up was high. It was like, oh, priced really high. So what you could have done is you could have went out and did what's called a Jade lizard spread. And again, I don't want to overwhelm anybody with what that all means, but it's essentially the ability to buy the stock at a discount. So the Jade lizard trade that I put out there, and I shared this with everybody on Smart Traders, I said, what you can do is you can sell the November $15 put. And at the same time, so that gives you, that's like the insurance company, right? Your house burns down, the insurance company needs to come in and they need to replace your house. That's me saying, I'm willing, somebody owns the stock, I'm willing to buy that stock from them at $15, but they have to pay me to take on that risk. So I'm being the insurance person. So I collected premium there, and then at the same time, I sold the call at 20 and bought, and I did what's called a bear call spread at 20 by 22.50. So it was a combination spread. Long story short, collected $4.50, which means my break even on that trade by November expiration is $10.50. So as long as the stock is above $10.50, I make money. And so the stock is at $13.14 right now. But here's the deal. The stock has fell. This is a bullish position. The stock has fell 22%. I sold the spread for $4.50, so I shorted the spread. So when it goes down, that's good. And it's now trading for about $3.25, which means this trade is up on a percentage basis. It's up $1.25 on a $4.50 basis. The options trade is up 27%. So you have a bullish trade on a stock that's down 21%, yet the options play is up 22% or 27%. How? Because we took advantage of the irrational premium in the market, the the amount of premium that we can collect to do this trade, and we were able to generate massive premium, be able to put the odds in our favor. And essentially, we set this trade up as a way where I said, I want to make money regardless of whether the market goes up, if it goes down, or goes sideways. It's a perfect example. If it would have went sideways, this trade would be up even more. If it would have went up, this trade would be up even more. And it went down 21%, and it's still up a 27% return on this trade. Pretty phenomenal. These are the type of trades, these are the type of things, guys, that I honestly wish I could spend all day, every day teaching students how to do, because this is the type of stuff people actually need to know how to do. So I just wanted to say that.
Yeah. Well, it sounds complicated, but I'm sure you make it very, it looks very simply
Yeah, it sounds
formatted.
complicated, but it's basically this. This is the question I ask myself before I place any trade with options. I say, where do I want to buy the stock, and what do I want to buy by what time? So if I want to own this stock by this time, so if, like, for example, let's say I look at the chart right now and I'm like, well, it's trading at 13, Tyson, I want to own it at 12. Okay, well, let's figure out how can we own it at 12 by, let's say, the end of the year. And guess what? We probably can own it at 12 or 11 or 10 lower and get paid to wait. There's ways we can do that. So it sounds complicated, but once you start to understand it, and you start to understand kind of, you're just asking yourself simple questions. And then when you own a stock, the best thing you can do is, let's say you own a stock. Every time I talk to somebody, they're like, hey, I own Apple. The thing you need to think about is this. Well, okay, if Apple went up 20%, would you sell it? Oh yeah, I'd sell it if it goes up 20% within the next 6 months. Well, why wouldn't you go out and sell a call? Why would you pay yourself some money, actually generate some income? If you have a level you're willing to sell it at, go out there and generate some income. It's called a covered call. Very simple. But these are the type of things that high-level investors and traders need to learn, so they can own the stocks they want to own at the levels they say they want to own at, and then get paid to wait for their certain targets to be hit.
Okay.
Yeah.
All right. Really interesting. Now, Tyson, do you speak about that in your trading room? Do you talk a lot? I know it's more focused on currencies, but do you chat about that as well? Because I know that Tyson, Chris, myself, we do talk about stocks. We talk about, give some sort of outline of what we maybe be paying attention to, or what we think the market's going to do. But do you go into a little bit more detail on options and stocks as you spoke about right now?
You know, I don't as much as I'd like to, and part of the reason why I do that on purpose. Part of the reason why I don't talk as much about stocks as I'd like to is because what I really try to focus on in my trading room is a to Z formula. And when I start to talk about stocks and other things, it can cloud up, right? Somebody can say, man, they leave and they're like, wow, that was amazing information. But it's almost like drinking from a fire hose and they don't know where to start. So what I try to do in my trading room is just say, hey, here's the problem. We do a money flow scoring process. We set our trades up with turning point max, call it a day, we're done. And for some students, and for all students, that's awesome. They're making a lot of money, but my goal in my trading room is to get it to a point where it's boring. And it's like, geez, this is boring, but boring and profitable is really, really awesome. What I'd love to do someday is be able to do my trading room and then have dedicated time, say, okay, now we're done with the normalized money flow trading room. Now we're going to transition more into stocks and kind of separate them. But yeah, I'd like to have more time. I'd like to talk about stocks more often. But for now, it's specifically about currencies and the process.
Well, Denise is agreeing with you. Stick to the formula. She says that's working great. So you're doing a great job in the trading room.
Awesome.
So listen here. Let's go ahead and move on to the next topic right here, where we want to talk about the U.S. election. And I know that there's a link being posted right here. Day one, by the way. Day one, which is the 2nd of November, the day before the elections, we have, of course, our event starting, the U.S. election event starting. You absolutely want to get in. Now, there's a link being posted in the chat. For those that are busy watching right now, there's a link in the chat that's just been posted. Get in to register for that day. It is free. You want to get in. It's absolutely going to be a killer session. Share that link with many people as possible. Get them in there. We want to go ahead and make sure that they get access to this, because we're going to be talking about it, the U.S. election, how the market's going to move. But also we've got, of course, Biden win options and Trump win options, and how it's going to affect the market, not just in currencies but stocks as well. Because remember, whatever happens to the stock markets, going to move the markets in the currencies as well, in a direction. And specifically, I know that we've chatted about this before, but Chris, JPY crosses, they're going to move, right? And what are you doing regarding what type of attention are you paying to the JPY crosses? moving into the last 2 weeks before the election?
Yeah, I mean, I think that next to nothing could happen the next 2 weeks, unless things get really dicey and really interesting. So let's think about what can damage sentiment. Right now, it looks like from the research I'm doing that Biden is favored to win. Okay, it's not official. It's not going to be official. Probably not on election day. Probably not election week. It might take the entire month of November, maybe longer. But what can really derail the markets? Well, we have coronavirus upticks once again that are coming in hot and heavy. We've got parts of Europe that are starting to do lockdowns. Jobless claims for the U.S. remains really, really high. We've had, I call it, coronavirus stimulus ping pong, because we have the Democrats, Republicans can't agree. They've offered 2.6 down to 2.2, 1.6 to 1.8. Like, they can't find the common ground. They can't agree yet. But here we are with McConnell and Pelosi still going back and forth. Now, are we going to jam something together 2 weeks before the election to give the markets another lift and just optimism, or is it like that stalemate will continue to kind of create more uncertainty into the election? So to answer your question, all I'm really watching, Gary, about the yen pairs is I'm watching the dollar yen, which I know is like a super boring currency pair. But that to me is where the dollar and the yen start to separate for once and for all. Now, I like Aussie yen short. I like Euro yen short. Pound yen I'm staying out of for right now, but I like Swiss yen short. But I just haven't seen enough conviction that the yens are really making this bold move yet. And I think in order to see the separation, the dollar yen is going to be the one that comes loose. And whenever it happens on dollar yen, I think that's where the basket's really going to shine. So for me, it's like if dollar yen breaks above 106 aggressively or breaks below 104 aggressively, let's talk about trading those levels and being bullish above 106, being bearish below 104, and I think the yen basket follows suit. So that's my barometer. I kind of look at that with a lot of situations on the election is what main levels would I have to see price above or below for me to start looking to actively trade it? Like right now in the dollar yen, I'm not doing anything, but that's what I want to watch.
My 2 cents, and I'm going to pass the mic over to Tyson Clayton about this too, but my 2 cents about what's currently happening right now. This morning I just finished the VIP session where we look at the certain pairs for the week based on target trading. And what we identified is that we're definitely looking at Aussie crosses to start rallying. Well, these Aussie pairs to start rallying, which means Aussie crosses that are base pairs that start rallying. But we're looking at Aussie rally this week. That's what we're looking at. So we're looking at extreme levels of oversold on the Aussie, which means that we're going to see some rally. Now, this is the thing. When I look at this, look at these setups, I see, okay, Aussie JPY looks to rally because of the retracement move. Now, it may just be a short-term move, not necessarily a long-term move, but this is my problem. My problem here is, and this is why I speak about the next 2 weeks, even if there's nothing going to happen with the JPY crosses, I don't want to be stuck in something and get into the elections and I'm in a position I'm stuck in, I'm maybe down on that position, and I've got to hold that position and make a decision on that, take a loss or hold on. I don't want to be in that position. So I'm looking at, as we're heading into the next 2 weeks, because there's uncertainty as to what's going to happen in the election, who's going to win, because we have sort of an idea, but it's not official yet. But if we do pay attention to the Aussie crosses and we get into positions on that, are we going to be stuck in those positions? And then if it goes south against us, then we have to make some really seriously good calls on that in order to be able to make sure that we not just getting out of the trade early, but also making sure that we're not taking too deep of a loss on that position. So, Tyson,
I'll say this, Gary.
on yours.
One thing that traders need to realize is that sometimes no trading is good trading. Sometimes sitting in cash and not placing a trade is making a decision. So I mean, I think you're probably to be safe right now, sit on your hands. If you're not certain and you don't have the conviction to get into something, then wait, because if you're willing to wait 2 weeks and you join us for this election event, I am pretty sure that we'll be dealing head on with a lot of exciting volatility, a lot of movement in the markets that would be, we'd be salivating at right now, but we don't have it. So if it takes the election to be the catalyst to start getting these markets to move every single day, that to me is a lot easier environment to trade than to think about positioning yourself ahead of an election when it's a big question mark. So I think a decision, I mean, this could be a proactive choice, but a decision would be don't do anything right now. You don't have to do anything right now.
Yep.
So that's my 2 cents.
Yeah, and I would say both of you guys are right. I mean, and I think you used the perfect word, Chris, positioning. I don't think we need to position for any position trade. I think what we can do is we can. So I'll give an example. I think you're spot on. Also, too, Gary, I am bullish on the Aussie CAD, Aussie Swiss, and Aussie New Zealand for the week. But that's it. I have no clue what's next week's going to bring. I think we're going to bounce this week. I think we're at levels right now that I'd like to start based on money flow, daily processes. I like starting to look for long positions right now for quick pops over the next 24 hours, 48 hours, whatever it might be. I am not willing to say the Aussie New Zealand's going to be rallying for the next, 2 months, or the Aussie CAD. Same thing with the Aussie Yen. Do I think, when we talked about it, ultimately I see it going down to 72. However, I could see a 60, 70 pip rally from current levels. Absolutely, I could see that. So locking in profits. And so I think what Gary said on the rallies and kind of being nimble for this week is important. I think we have opportunities to take advantage of some movement that we're looking for this week. But this week's movement doesn't mean it's going to be the same next week's movement. We got to be on top of these things. So being with us in that election event is very, very important. Or you can do it like Chris is doing. And I love the dollar yen, the way he's playing the dollar yen. Just bracket off the dollar yen. Put a line at 106, put a line at 104. We break above 106. It's probably not going to happen. I think we're going to do a whole lot of nothing between now and the election. But we go above 106, guess what? That's a nice clear level, possibly up to 111, 112. We break below 104, maybe we go down to 100. But that's kind of the area. In between that area, either look to buy the lows and scalp on the upside, and sell the highs, or do nothing. Yep. But so I like taking shorter term trades on kind of daily or weekly glimpses right now. I'm not willing to go out on a limb and say, hey man, this currency pair is going, down forever. Yes, I think the Aussie yen's going down, down to 72. Could go back up to, could rally up 75 pips between now and then go down. So for the next few days, let's play the long side on some of these pairs, and let's have every single day, every week, we got to come in with our homework done and reposition on what that week's going to give us. And that, again, leads me back to saying, make sure you guys are with us during this election event, because that's when we're going to start to be able to really start formulating some longer term plans, because that's when, even if we don't get clarity, I think we're all going to be smart enough to kind of with probably an 80 to 90% degree of certainty of who's most likely going to be what the outcome's most likely going to be, even if we get a contested election, because we can use history on when this has happened and all this kind of stuff. I think we're going to be able to forecast what is most likely going to be the long-term projections at that point. And what we're going to do is we're going to have a blueprint based upon, if Biden gets elected, here's what happens. If Trump gets elected, here's what we're looking for. If there's a contested election, here's what's going to happen. And so we're going to walk students through this, but I don't think, as both of you said, I don't think we're going to have any, I don't want to make any bold predictions until that time. But I still want to take what the market's giving me right now and be a little bit more nimble and generate income between now and then start to look to position longer term.
Yep.
Yeah, absolutely. So let's go. Let's just summarize this and just so that everyone has a thorough understanding of exactly what the game plan is moving forward in the next couple of weeks. Take some short-term opportunities. Don't hold on to long-term position. And if you are going to look to, if you say, hey, big dog, my strategy is to basically go ahead and level in on a position. Maybe not a good idea to go ahead and start that off with JPY crosses that's going to be affected by the US election result. So stay away from those and pay more attention to the ones that aren't going to be affected. I mean, there are pairs that's going to be indirectly affected, but not directly affected. And you can go ahead and start playing with those with some sort of like leveling positions or strategies and so on. But stay away from the ones that are really going to be affected by the end of the month or the US election period. Stay away from those. And if you are going to trade them, be very short term on them. So get in, get out, just like Tyson spoke about. Just like you can see right here, this is the document we fill out in the VIP session, and you can see right here, this is what brought it to my attention is, take a look here. We got pound Aussie that's looking for an overbought condition. We got Euro Aussie looking for an overbought condition. We got JPY, Aussie crosses right here, all looking for oversold conditions. So if you look at that, it tells me right now, pay attention to Aussie crosses this week. It's definitely going to be a mover, but also more importantly, be short term on that. Don't be long term. Would you guys say that we're all on the same page with that regard?
I would agree. I'll add one thing, and I'd like to get your guys' opinion on this. I think the easiest way that traders could manage this over the next 2 weeks is trade correlation. Trade risk on and risk on. Trade risk off and risk off. So Euro, Swiss, risk off more and risk off more. So both kind of risk off currencies. Aussie CAD, risk on, risk on. So you're going to essentially kind of not eliminate, but limit your risk of that massive move by getting some shock in the economy by trading New Zealand CAD, Aussie CAD, CAD, we'd say, Aussie CAD, New Zealand CAD, even the pound CAD pairs, or risk on and risk on, dollar yen, euro Swiss, maybe even euro yen kind of in that category. What do you guys think of that?
Yeah, I mean, look, I think we're all kind of saying the same thing. Like, as long as we're kind of short-term oriented right now for the next week or two, that's probably the best position to take. If you just can't help yourself and you've got to be trading, definitely on the short term, go after. I mean, target trading would probably be great this week. Look for some intermediate levels for scalping. I'm certainly going to be watching the pound pairs this week, like we talk about every single week in my trading room. As simple as a London daybreak strategy. If the pounds want to move, they're going to move, and they're one of the best baskets to trade during these London sessions. If we have good volatility. Like, that's the one thing I keep saying to traders. Like, everyone wants to know about, how do I day trade? How do I scalp? I'm like, look, the first thing you need to be a scalper is you need movement. And if we don't have consistent day-to-day volatility, it drives me crazy to try to teach people how to scalp. So, I mean, the opportunities are there, but it's few and far between. I think realistically, if I was setting targets this week, I'd be going after like 20 pips. If I can get a 20 pip win this week, that would be awesome. Take it, get paid, and just keep that exposure down. Keep building that cash, keep building that margin, and know that in the next couple of weeks, you're going to be able to put it to use. And when the dust settles, whether it's Biden, whether it's Trump, whether it's contested, whatever the market throws at us, we will be ready and we'll be prepared, and we'll be talking through everything and trading through everything.
All right, guys, just to close it off, I want to get your opinion about one currency pair that you're going to be paying attention to this week. And in one sentence, why? Go for it, Tyson.
Aussie CAD, money flow bullish pattern.
Perfect.
Cool.
Go for it, Chris.
I'm going to go Aussie New Zealand because my plan on that one that's been in the works for a while now, I finally have a nice little level back at 108 that's going to become my target for an eventual buy trade. So I would love to see Aussie New Zealand sliding this week to the downside. If we can get to 106, I am ready to start building some buy positions at 106. I'm going at least to 108. But I think we have a long-term outlook on Aussie New Zealand higher than that. But I want to start looking at where to accumulate Aussie New Zealand buy positions.
Tyson, I don't think Chris understands one sentence.
That is my one sentence. That was a run-on sentence.
That was a run-on sentence. It was one.
No, it's all good. It's all good, bro. I'm just kidding with you. All right, so mine will be Aussie CAD, and if you look at it, we have bullish divergence. That's on the daily time frame. Bullish divergence on the daily time frame. So there you have it. Aussie New Zealand dollar,
money flow.
Both of me. What's that?
I said, and money flow.
Oh,
well,
that's your choice, right? That's your choice.
Just so you guys know, I'm actually taking my profits on Aussie CAD, my shorts, all my sell positions. I have one position in still of like the 10 that I had, but I took on Sunday night's market open in the gap lower in my broker. When the spread settled down, I started taking profits around 93.25 last night. So I'm out of majority of my shorts on Aussie CAD, and I'm right there with you. Like, I think between 93 and 92.50, I'm looking for long positions on Aussie CAD.
Well, there you go, guys. We've got a lot of traction on Aussie Canadian bullish. We'll talk about that again next week and see how things are played out. Aussie CAD bullish. Get into the trading rooms. Get into Chris Tyson's my own trading rooms. Get into the trading rooms because we'll talk about the details of the trades, what and how we're going to be entering those positions. But we're definitely looking at Aussie CAD bullish. The thrown in there is the Aussie New Zealand dollar as well. Chris is going to be paying attention to that as well. Keep in mind, we're going to be looking at many more currency pairs in the trading rooms. So if you want details of those, get into the trading rooms, and we'll go ahead and share that with you then. So Tyson, Chris, thank you very much for your time. Appreciate you guys. Students, we love you guys. Once again, if you haven't subscribed to the channel, please go ahead and do that right now. Smash the like button and go ahead and comment on the video as well. We'd like to hear from you too. So with that being said, we'll see everyone back again next week. as we're heading into the US election. It's going to be a rough ride, but it's going to be a very, very exciting one too. We'll see you then. Cheers.